Welcome to Pulse Point, the financial services podcast produced by Synpulse North America. I'm Matt Cecil, associate partner and head of our retail banking practice for North America. For this episode, we'll be diving into a business and platform strategy discussion on two hot topics in the banking industry: client segmentation and AI. My guest today is Dave Small, the head of strategic partnerships for Faraday. Faraday is a US-based B2B company that describes themselves as a modern data company powering AI marketing stacks. While they operate across industries, we'll be focusing on their retail bank and credit union work. Welcome, Dave. Appreciate you taking the time to come speak with us today. I think a great place would be to start would just be tell us about yourself, and a little bit about your personal background, maybe a little bit about your career before Faraday, just to set the scene.
Yeah, awesome. Very happy to be here, Matt. Thank you for having me. I've been with Faraday for about coming up on 5 years now, really running partnerships and new business development for them. I got started in my career in San Francisco, working in education technology, specifically around mobile apps. And it was really the boom of the iPhone app, right when the first iPhone SDK came out, and really focused on taking the student learning experience to a mobile application. So I was working for a company that was a global ed tech and really rolling out these iPhone apps all across the world. So got a really great experience understanding how kind of a legacy industry, education, that was very in-person focused, started to transform into a very digital and very on-demand, anywhere type medium. And I've spent the last 15 plus years really working in customer-facing roles, in many cases on the kind of edge of technology and brand and marketing.
Cool. I mean, that sort of digitization element and customer-facing aspect, there are a lot of things in common, I think, between what we do and what you guys are doing in your career so far. So that's very cool to hear.
Totally.
So I'd love to talk a little bit about Faraday, right? So like, how was the company founded? When? Maybe what was the initial mission? Just sort of overall background and sort of maybe a little bit about Faraday's USP.
Yeah, absolutely. So we're about 12 years old as a company, and we got started in the home services space, specifically around solar. Really one of the early solar booms, companies were having a really hard time trying to figure out who was likely to put a solar panel on their roof. There's a lot of existing conditions that need to be met to be a qualified customer for that. You got to own your home. You need to have the right financing or finances. You got to have the actual interest to go ahead with that kind of project. Your roof has to be in the right condition. So there's all these different elements of data around people, around property, and around financials that are necessary to kind of make sure that interest ends up converting to a solar install. So we started building this data set. We started building these algorithms and these workflows to help these installers identify their best fit customer. And it kind of snowballed from there. We started to get introduced to the roofing sector and the windows sector and the siding and all these other elements around the home. And then naturally, many of these are services or products that require financing. So then we're getting introduced to the banking and the credit unions and these other folks who are tangential to these big projects. And then from there into direct-to-consumer and retail and e-commerce. And those are really our three kind of major pillars today at Faraday: financial services, home remodeling, and retail and financial services.
Yeah, I mean, that's a really cool story, and I can definitely see how financial services is kind of a natural jumping off point. It's part of that huge sort of value chain around solar, and you're in a pretty regulated industry and all of that. Like, these things are pretty matched up well to the banking space, right? So I definitely see where that jump sort of just logically made some sense. But would love to hear a little bit more about like how you guys got into the banking and credit union space, and maybe just a little kind of preview of how you guys are succeeding there, what's sort of the focus topics that you guys have there.
Yeah, absolutely. In general, especially with credit unions and retail banks, the theme there is growing the share of wallet across these organizations. And so when you may have one product with one institution, another with another, and so being able to give these institutions the insight into how do I give each customer, each lead, each member the most tailored experience so that they're going to come back for more to us when they're ready for that next product. And so it really just started, first working on an auto loan campaign, and then expanding that to mortgage, and expanding that to HELOC, and expanding that to all these other services that the bank or credit union could offer to their customers. It really organically kind of grew from there, and a lot of word of mouth amongst our customers, and a lot of our strategy around partnering with agencies to help roll out many of the services that Faraday could power to their portfolio.
That definitely makes a lot of sense. And so you're starting to touch on sort of where I want to go next here. So what you mentioned there about like what's the right product at the right time for the right customer and all of that. I mean, those are sort of key tenets here of this sort of client segmentation understanding here, right? So definitely want to hear a little bit more about sort of what the philosophy of client segmentation is at Faraday, because when we're looking at client segmentation and especially working with our banking clients, like this is something that's like fundamental to how they're set up as an organization, right? Like they have entire product suites and service models based around client segmentation. It's really something that they're kind of living and breathing in their institutions, right? So we'd love to hear a little bit more about what's that sort of Faraday perspective or philosophy around client segmentation.
Yeah, I mean, it all starts with the data, and I think Faraday thinks about segmentation in a number of different ways. The one, there's just kind of simple, your old school segmentation around, okay, these folks have these products. These folks meet these certain demographic or, financial categories that are important to us. Maybe it's a household income threshold, or it's just, some basic demographics. But really where Faraday shines is allowing our customers, or rather enabling our customers, to power segmentation with these predictive or custom traits or custom attributes. So for example, one is around propensity. So thinking about people's likelihood to take a certain action, their propensity, based around certain products that are important to the institution. So maybe that is around a particular type of loan, an auto loan, for example. Instead of saying, hey, everyone who has a car, everyone has two cars, and using kind of a basic demographic filter, you could use a likelihood score, 1 to 100. Someone's likelihood to need an auto loan in the next 90 days, right? And that right there, you pick a threshold based on your cost to targeting them and your return on your investment. You pick that threshold intelligently, and then you're using that threshold and those data points around that propensity to adopt that particular product as your key to segmentation. And so that's going to allow you to drive smarter and more efficient direct mail campaigns, for example, digital targeting, or whatever it may be that your organization really leans into.
Cool. So I love thinking about something like propensity because it's kind of this like aggregate of many different data points that's sort of giving you like actionable information, right? So can you maybe unpack that example a little bit and maybe say something about like what sort of the data points that are going into something like propensity, or how sort of the modeling is done in order to sort of create that advantage or the success that's coming from that?
Yeah, absolutely. So the way that we approach the modeling and the kind of the data generation stage is really by combining the institution's first-party data about the customers, about their leads, with this third-party data set that Faraday has. So that's really where we see the magic happening. Your data is proprietary to you, and ideally your organization has done a great job of categorizing it and maintaining it. And that data is really useful when you can put it to work. Now, on the other side, there are all these different data brokers out there who provide third-party data about people. And that's kind of a commodity at this point. Like the data is pretty much the same across all these different providers. The magic really comes when you can combine them, which is really quite difficult, by combining those two data points and using those two buckets of data and using those to create these custom propensity models. So for example, hey, let's look at all of our members in the case of a credit union. And then let's look at a subset of those, the ones who just have, an auto loan with us and have gotten that auto loan in the last 6 months. What makes those people unique from the larger customer base or even the larger population that we serve? So what Faraday does is basically, in essence, who goes from this bigger bucket to this smaller bucket? And what are the data points across your first party data, email opens, app sign-ins, in-person visits to the branch, with the third-party data that Faraday has around hobbies and interests and around the number of cars they have and around their property information and all this other stuff. So we basically see, why does someone go from bigger group to smaller group? We find the patterns across 1,500 plus data points that we have and however many data points you have. And the system surfaces the data points that are most important and then also shows you the directionality of each of those. So, okay, it's not just household income that's important, but it's a certain threshold. It's not just hobbies and interests, but it's a certain hobby or interest. It's all these different pieces that show you what makes these folks different. So then, when you're thinking about, great, I have a new prospective member or a new customer coming in, how do I treat them? You're able to very clearly identify the different traits that are underlying that consumer and tie them to this model that you've built so that you can give them a really accurate score and then build that segmentation around those scores.
Makes sense. Is there any sort of particular element about sort of the banks and credit union space that you think would be differentiating from your experience across different industries here in this sort of segmentation sort of modeling?
Yeah, great question, because we work across all these different industries, which is really helpful because we can pick up, whatever's happening over here in direct-to-consumer e-commerce and retail, and we could bring that to our other verticals that we work with. But the thing that really sets us apart with financial organizations is our focus on transparency and on explainability and around the, control for bias mitigation. So obviously, given a highly regulated industry, we have provided all kinds of levers and views into what the models are doing. So you're able to block protected classes, for example. You're able to build a model that excludes for biases that may be pre-existing in your book of business. And you can really understand what's going under the hood. This is not a black box solution. This is very much like when you build a model, you get pages and pages of documentation around what's going on with that particular model. And you can even see on an individual basis, hey, why did Dave get this score? What are the attributes that are most impactful to the model on his individual person? So you can understand really what's going on and why the system is doing what it's doing.
Yeah, I mean, I think that's a huge part for lending products, especially like, staying compliant and being able to explain sort of what suggestions are made for what customers or prospects. Definitely interesting to hear about. Maybe it would be interesting to hear like one level deeper about like how you guys achieve that explainability. Because I know, it's just a hot topic in general in the AI space right now. So maybe a little bit more about that would be interesting to hear if you have something to say there.
It very much has come from our work with financial organizations, right? Mm-hmm. And so given that we evolved into that space and the product evolved with those customers, we're very open to customer feedback of saying, hey, for regulatory purposes, for ethical purposes, we need to know what's going on here. And we build our product with our customers in that way. And so really making sure that they have the visibility and the feedback into our product roadmap has been crucial for us building these. And essentially, it's really been a Herculean effort by our data science team to wrangle all of this data and build a system that really focuses on the explainability of what's happening under the hood. Because I think the more and more you unpack what's happening in big data and AI today, there's a lot of this like, I don't know, the system gave us this answer, right? And that's just not appropriate when we're thinking about these really, really important products like lending, for example, where we really need to know what's exactly happening so that we can best serve our customers.
Yeah, absolutely. So I think that what I'm gathering from your explanation, there's a lot of this sort of predicting customer behavior, but doing it in a way that allows you to be able to understand why you're making that prediction is sort of where you guys have an edge when it comes to, I guess, the market more broadly, but specifically within financial services.
Yeah, absolutely. And I think it's also translating into other industries, especially industries where maybe there's more, skepticism around AI and machine learning, just to be able to say like, hey, this person got the score because of these reasons. It helps them understand, okay, like this is not just some random answer the computer spit out at me. This like, there's basis here. Like this makes sense to me. It kind of like helps us as people sniff test how these algorithms actually work.
Yeah, it makes a lot of sense. Cool. So I'd love to talk about a specific example, right? So maybe your favorite example or the one that sort of best expresses the advantage that you guys have in the banking and credit union space, and kind of like what was the challenge that you're looking to solve? What was the approach that you took? Maybe what were the outcomes that you were able to achieve?
Yeah, absolutely. I think one that comes to mind is actually many of our financial institutions work with partner agencies that we have. And these agencies are just really well equipped to take Faraday, take the customer's data, and really make really impactful outcomes from it. And one of our agencies in particular focuses on banks that merge. And so, in one case, I'm thinking about our product recommender, which is another one of our methods for segmentation. They're using that across now this new merged banking portfolio, and to make sure that they're able to surface for these net new people that are basically being all of a sudden opened up to this whole new product portfolio. They're using the product recommender to understand really how they should target these new folks with this now expanded product set. And so that's been really exciting to think about these folks as far as like they're very different groups of people who are now under one institution, and to thinking through how they are using these product recommenders and these propensity models to understand really how to best serve these individuals. And I think that's what's really exciting is now these individuals are not just getting, the product that the organization really wants to push at this moment, but really what's best for them as consumers. And to me, as a consumer, that's what I'm looking for from my financial institutions. Like, I don't need a big lobby. What I need is like the right service for me right now in the medium that's going to make sense for me. And I think that's something that I'm really excited to see happen with our customers.
So I love the merger acquisition kind of case that you bring up, because sort of, especially down market, we're seeing a lot of consolidation in the banking industry. So that's something that, I think will be relevant to a lot of different clients of ours and listeners. So I'd love to hear a little bit more about sort of what stage did Faraday come in this process? Like, was that data already consolidated between those two institutions and it was all kind of primed and ready to go? Or, was there engineering work that you guys had to help with to sort of get it all stood up? Just kind of put me into that process a little bit.
Yeah. It's actually, one of the benefits of Faraday is that we can do a lot of that identity resolution within our own system. So all of a sudden you've got these two, sets of people data with all these products, and when you ingest data to Faraday, we basically then resolve everybody to essentially like one row, right? And then all the different columns on that one row. So all the data points, think of them as columns. All the rows, think of them as people, right? So we are doing that identity resolution on our side. So essentially, we got inputted two very large data streams, right, for each of these organizations. We resolve it within the Faraday system. That's part of the data onboarding process. We pair a forward deployed engineer and a forward deployed data scientist to these projects for however long they need to be deployed to. Could be the first 90 days, could be longer than that. So that we're able to make sure the system is ingressing all this data, resolving all these people, and then taking all of those columns, those data points, and turning them into features for the models. So enabling the system to do this feature engineering so that when we then say, great, historically, these are the people who have, converted on our home equity loan product, right? Let's look at them as the training set. Think about all the data you have available to you, Faraday, and then let's compare them to the general population and figure out propensity models from there. And so really a lot of that is happening in the Faraday system. So we can come pretty early on in that process to help with that. Now, we've had a relationship with this agency in particular for a couple of years now. So when they were really pitching and really getting in and making sure, hey, we're going to be the agency to help these two organizations come together and be a more powerful single organization, they had Faraday in their back pocket. They knew how they were going to do this with us.
Right. Yeah, I think it's interesting that you are getting involved, let's say, earlier on in the sort of value chain of getting this sort of mobilized and actionable, since that's a big challenge for a lot of banks these days, is like, being able to merge customer data and understand who is the one customer that we have and like what's the data survivability around that, like what are we keeping, what do we throw out, all that good stuff. That's certainly a huge challenge. So being able to support that as well, I think, is an interesting sort of value add within the sort of full segmentation lifecycle there. Cool. So from that example, Dave, you've kind of laid out, all right, what was the challenge that you guys were looking at with this credit union? What was the sort of approach that you guys took to solve it? So maybe a little bit about outputs, like what was sort of the headline figures that you guys were able to achieve in this case with this credit union?
I could think of one lending organization who uses us, who does a lot of direct mail. And they were able to reduce $600,000 in direct mail spend very, very quickly with Faraday, just based on their volume. They were just looking at how many folks they were sending these mailers to, and then just said, let's cut off the bottom, 2%. 4%, 5%. They were able to understand if there were any conversions happening here on these very at the bottom end of their scored list. They just dropped those people and stopped mailing, and were very quickly able to see significant savings.
Gotcha. And I'll continue to put you on the spot one more time here for a figure. But the lower cost I definitely get is there a sort of higher throughput that you're getting, or higher conversion as well, like to some meaningful percentage or something around that as well?
Yeah, absolutely. Well, a lot of it is around maintaining the conversion rates.
I see.
But dropping the spend.
That makes sense.
Certainly that is a big focus. Now, the increased conversion rates a lot of times will come from thinking of a call center example. So a particular product in the insurance space, their call center does not have an even flow, right? Like they have really busy periods and really slow periods. And really the problem is in those really busy periods, they just don't know who to call first, right? And they want to be as quick as possible to call the right person at the right time, given that someone has expressed interest in their particular product.
Right.
And so to be able to use Faraday to prioritize those busy periods, they were able to see a 20% increase in their conversion rate because they just were not missing the wrong people at the wrong time. So that's really where they were thinking about driving conversion rates, is on that in that call center use case.
So from that perspective, segmentation is more about like how am I prioritizing the correct leads, right?
Totally. Yeah, the prioritization comes in like at the very top. If folks are like buying leads, we can help prioritize there. So an interesting actually example of if people are buying leads, they can actually help use Faraday to reject leads in real time that they may be buying, or also to understand how their lead sources may be changing by scoring those lead sources on a regular basis. Then once they have the lead in their system, they can use Faraday to prioritize, who do I call first? Maybe I'm doing some sort of rep assignment type prediction to understand who should Dave be talking to as far as like assigning a lead to a rep.
Right.
And then of course there's the retargeting, right? And then there's understanding who I'm going to be putting a new customer or an existing customer. What product am I going to be putting in front of an existing customer to make sure that that's the right thing for them at the right time?
Got it. And I mean, what I'm hearing from you, it sounds like a lot of this sort of like the foundation of the segmentation that you guys are succeeding with is almost this like data lifecycle in some sense, like not just what goes into it, but I mean, to your point, buying leads, rejecting things before it even comes into your system, like being able to just more actively filter and manage the sort of massive data that goes into this whole process, right? I mean, is that an accurate sort of way of thinking about it?
Yeah, absolutely. I mean, it's just, data can be extremely overwhelming. Right. And so when you use a system like Faraday or predictive models that, the things that Faraday can help folks build themselves, you just have so much more insight to how you can, think about the best way to approach this messy, world of data.
Any sort of interesting, funny data points that have, let's say, surprised you maybe within the banking credit union sort of segmentation process?
It is really funny because we have all these random data points, like, number of Mazdas that someone may own, like just completely random data points, like interest in men's big and tall clothing. Like all of a sudden, like all these things come up and you're like, this is so weird. Like, why is this showing up? And like, then you maybe like dig a little deeper and you're like, oh, okay, this is maybe some sort of proxy for some other buying behavior or whatever it may be. So it's really funny. I can't think of one off the top of my head, but when you like scroll through the data points that are available, you're like, this is just such funny, like random stuff that can pop up. And, like people's likely to have a pool. Like I never would have thought of that, but certainly there's all kinds of different like, things that can be learned about someone's property if they have a pool, right? Like it's all these random things that we'll will pop up that are always, kind of head scratchers.
So you're looking at like, if I'm like a Mazda Miata collector or something like that, and I have 8 Mazdas, like what type of checking account I should be opening, basically.
You probably need some auto loans.
Yeah, that could be the case, very much so. Cool.
And you might want another garage. So, there could be a home equity loan in there too.
That's very true. I think I'm being upsold in real time. So I own 0 cars, though, to be fair. But I'm sure you could probably look that up if you had the time to do so.
We can. We'll mention that you are very much not able to look up individuals. I would love to know what my own company like has about me, and obviously just given the sensitivity of the data, individuals like cannot actually look up someone's data set in Faraday.
That's true.
It's really there for the modeling.
I'm glad that we could take a joke and make a salient point out of it. Yeah. So that's definitely good to know.
Yeah.
And I'm sure it will help people rest assured about regulatory compliance and all these other aspects of data that can be a bit frightening to think about. So
totally.
Cool. So I think a lot of great examples there. Would love to hear a little bit more about sort of the future, maybe some forecasting about segmentation and sort of AI's role in it. So maybe just to start more like short to medium term, like what's sort of the perspective on banking and credit unions segmentation modeling sort of in the near term? I mean, with what's available now or maybe what's available in the near future? Yeah.
So I think the thing that we are really seeing now is like, I mean, it just, this AI is really everywhere at this moment. Whether it is actually everywhere or it's just being talked about everywhere, it's certainly part of the zeitgeist. People's marketing will be powered by AI. That's kind of where we are seeing it moving. It's just a more, efficient, targeted, personalized approach to marketing. So really what's going to differentiate people in that world is the underlying data, right? We've all heard the term garbage in, garbage out, and that is like never been more clear. If you're using ChatGPT and you put in a bad prompt, you get bad results, right? Like it's a really clear example of like, this just doesn't make any sense. You look back at what you told it or what you asked it, and it's like, yeah, I was probably a little lazy in what I put in there. So the way that Faraday's customers are, thinking about this is, all right, we have this really rich first-party data set that is unique to us. This is like our IP, right? And our customers trusted us to give us this information. Then there's this, kind of off-the-shelf third-party data that is a bit of a commodity, but it is really hard to wrangle. And so Faraday's customers' advantage is that they can kind of combine these two data sets to create these powerful, unique, custom and predictive data points about their customers. So that's really where we see that like that alchemy of those two data points as being like near-term, advantages that I think once folks figure out how to kind of do that, you're going to really see an up-leveling of this idea around a really targeted, kind of segment of one type personalization. So that's really where I see things like shorter term, next couple of years.
Yeah, I mean, I think that the data integration piece is like a huge point there because, I mean, at least in the banks that we're working with, oftentimes, you look across and one of the big things that they're looking to do is like, how do I look at my customer holistically? Like I have a customer who has a loan and maybe that customer data is sitting entirely siloed in sort of my lending department or whatever the case may be. Mm-hmm. But like now I want to look at that customer across all areas and understand how do I sort of serve them with the right thing at the right time, right? So I think this data integration point is like super, super salient for the near term future. And I think that you guys are kind of showing a little bit, especially a little bit more down market where, there's not quite the same volume of customers and maybe the complexity of customer data that you have with some of the bigger institutions, kind of seeing what can be possible in the near term with what you guys are doing today. So I think that's definitely a cool point to raise. So yeah, I mean, you mentioned sort of a little bit more towards like this customization, sort of segment of one concept. Like how close are we to something like that? Is AI going to really bridge the gap there? Or sort of like, what's the sort of more longer term future of segmentation?
Yeah, well, I think like when you have, if you have a data point that is predicting an individual's likelihood to, buy a certain product, take a certain action, whatever it may be, and then you can build the appropriate like automated workflows. The automated workflows is really where we see AI excelling, right? And so if you have the individual data points and then you have the scale to build automated workflows for an individual, and it's really smart because the prompt in this case, the propensity to do something, that's the prompt. If the prompt is accurate, then you're gonna be able to kick off these really interesting, one-to-one experiences. And so I think we're pretty close to that. I'd be interested to see, I think, and if we look down the future, I think it just gets more and more real time, right? You know, so something that we're seeing a lot in our retail e-commerce business right now is the ability to identify someone like on site in real time, right? And then being able to, once you, even if they're not a customer yet, being able to like identify that person who's browsing, who might be interested in, and then kicking off, you know, whether it's a direct mailer that's going to show up at their door in the next couple of days, you know, based on the thing that we're looking at, you know, real-time personalization, print it, get it in the mail and go, or it's just, you know, retargeting digitally, but just being much smarter about that, or showing them the appropriate offer, you know, right there on the page or in the app. You know, those kinds of like, you know, really in the moment are really like an exciting idea that's going to ideally give folks what they're looking for, you know, help us as consumers get the right answers when we need them, when our attention is really there. Because I'm a pretty distracted consumer, I can tell you that.
No, I definitely hear that. And so I'm thinking about this in like this sort of bank context, and, you know, tell me if I'm off here, but that's like, I see you coming into my branch as a customer, for example. You have a conversation with, let's say, a financial advisor or a personal banker or something like that. We take the notes of that and sort of take your branch visit plus that, and then all of that is sort of kicking off some automated workflow to say, hey, because of these factors that we have now tracked, we want to, like you said, direct mailer, some type of electronic retargeting, some type of cross or upsell opportunity, like sort of all of that happening in a very like frictionless sort of low touch way is sort of where you're speculating about, right?
And like, I think that's a great point, that the notes, right? That's like unstructured data typically. So the ability to be able to take that unstructured data and then feed it into these propensity models, and then being able to kick off those downstream activations, those downstream campaigns, that stuff is a really interesting, you know, I mean, other than writing the individual note and, you know, like sending something in the mail to somebody on an individual one-to-one basis, like kind of how it used to happen, you know, back in the day. I think we're getting there where we can automate that kind of stuff. Exactly.
Cool. I mean, that's definitely a very interesting future, because being able to do all that in sort of real time, like you mentioned, I think is a really a big game changer for sure.
We see organizations have all different, like, you know, organizations have different levels of readiness.
Right.
Right. And so I think, you know, the idea of like, oh, okay, like predictive modeling and all this is like, people want to do it, they aspire to do it, but maybe they're like, how do I even get there today? So we certainly have organizations that will just start with like basic, I need to know more about our customers. Like, we're building out the customer 360 and we just like do not really have a sense of these people outside of, you know, the one product, the two products they have with us. So, you know, they'll maybe first use Faraday to think about, all right, let's add some foundational data here. Maybe we only have their email, but we want to be able to direct mail them, or we only have their physical address, but we want their email. Like, how can Faraday help flesh out the profile of these people from, you know, for identifiers? And then, you know, it's like, okay, there's some of the demographic, there's property information, there's stuff like that Faraday can help flesh out. And then, you know, from there, then they start kind of crunching the numbers, and they start, you know, the data analysts start getting into, okay, we now know more about our customers. Now it would be really great to be able to predict certain things happening. And then that's kind of, you know, Faraday's superpower, is to be able to power that. So, you know, Faraday's really flexible in helping folks get started with this kind of data. And our system is, you know, it's API based, and there's a web dashboard. So, you know, anyone can really go in and very quickly learn how to kick off a predictive model. And, you know, that thing builds in a couple hours. And, you know, we're named for Michael Faraday, the great experimenter. That's the idea of the platform. Like, go in there, build stuff, experiment, see what happens, and understand what's happening under the hood, so you can make really smart decisions about how you want to apply this downstream.
Yeah, I mean, it makes a lot of sense to me. And I think the point you raised about sort of that 360 customer view, I mean, that's been a topic in banking for, I mean, a decade now at least.
Yeah.
Something that people have always been trying to achieve, but has always been kind of elusive. So it's interesting to hear that you guys are kind of helping to get closer to that. And, you know, I think that a lot of what we're seeing too is to that point about setup is, organizations are really trying to get ready for this sort of near-term future that you're kind of describing, right? Like, especially larger institutions. I mean, they're obviously trying to build out their models and sort of get all this predictive analytics and stuff ready to go. But so much of it is just like, how do we get everything foundationally set up, integrated so that it's ready to be used and it's ready to add value to businesses? And so that's at least a lot of kind of what we're doing right now is, some of the sort of use case modeling around sort of how AI might be useful in an organization like a bank, but also like how do you just be prepared for that, that sort of longer term goal of having the foundation ready for whatever developments might come in this space over the next few years.
Right. Because if the foundation's not there, you're going to be behind.
Right. Or you're going to be bottlenecked by something, there's always going to be some challenge there that stops you from getting that true value that you're really looking for in that sort of target state.
Right.
Cool.
No, that makes a ton of sense. And I think that's such that, we often have relationships that, span many years with Faraday. And sometimes it's just we meet someone at a conference, through someone, and they're kind of in that stage of like, we want to do this, we aspire to do this, but we are in such a process of getting our, data ducks in a row to be able to do that. And, often it's a conversation with like, we can help you with that. Our system is able to bring in all these different data streams, but, obviously fundamentally, sure, Faraday can help them maybe plug a hole, but if they get the data in order, in a way that's going to be super valuable across all these different use cases, they're just going to be so much better set up for the future. So that's such a valuable role that you're playing.
Cool. I think it's a great place to end. So thanks a lot, Dave, for taking the time to come on the show today. Really appreciate all your insight and hearing about Faraday. It's a very cool platform and, hopefully something that folks can see more of in the near future.
Yeah, super grateful to be here. Thanks for hosting, Matt, and it's been a lot of fun.